welcome to my channel. Now we take another discussion essay 570 which is revised on 1/4/2009. Going concern. Okay. In S1 fundamental assumption of going concern, in the S1 FRF, this all is talking about going concern, but Indian gap is not talking about going concern. Okay. Here in S1, as per FRF, financial statement are prepared on the assumption that the entity is a going concern and continue its operations for foreseeable future. Entity will be able to realize its assets and discharge its liabilities. Assets are more than the liabilities. Okay. So here, as an auditor, what's our duties? The assessment of going concern is duty of the management. Then our duty is to inquire from management that assessment of the entity's ability to continue as a going concern at least 12 months or more. If the management give assessment report less than 12 months, then we request to the management that please assess the ability of going concern at least 12 months or more from the financial statement date. Okay. Then auditor take latest interim financial statement. Auditor read the latest financial statement, read the interim financial statement, read the minutes of meetings, take a written representation from the management as per 550. This all documents is helpful for the auditor to check out any doubt on the ability to continue as a going concern. Okay. Doubt factors can be financial, can be operating, can be others. Whatever be doubt factor can be liabilities are more than the assets. Long-term borrowings is financed by the short-term borrowings, or there is no any supplier who give raw materials on credit, all shifted from credit to cash, or there is negative adverse financing ratios, there is negative cash flows, there is any litigation which is pending on our entity. If the litigation claim will arise, our entity is not able to settle this claim, or any government policy, change in government policy which affect our entity, enter any competitor which affect our entity as more as our going concern is in danger. So this all is factors, because this question is very important for exam. So I give a memory trick for the factors of financial, operating and others in 3 categories. Memory trick is very helpful in my opinion, because I got 66 marks in ISCA and now I am preparing for first group and I think it's useful, so I give memory trick. Events and conditions may cast doubt about the going concern assumptions. Financial memory trick is LCD of L square, C square, D square, O square. F is already in square. L is net liability or net current position. Net liability, that is assets is less than the liabilities, or current asset is also less than the liabilities. That is the net liability or net current liability position, net current asset position. And then L is inability to comply with the loan agreement. We are not able to give the installment and interest on the due dates. Okay. Then C for withdrawal of the financial support by the creditors. Our creditors like bank, other financial institutions, other creditors not give financial support to us. C, there is creditor who is the withdrawal of the financial support and inability to pay the creditors on due date. On due date we are not able to pay our creditors. This is also a doubt on our going concern ability. Then D for discontinuance of the dividends. We are not provide dividend because we haven't any profit. Then D for transaction with the suppliers change from credit to cash on delivery. Every supplier provides raw materials inputs to us on cash, not on credit. O is operating loss. There is a huge operating loss is in our entity. There is use stock which is non-moving, many more other factors which is affect our profit, and our entity is in loss. There is operating loss. O is negative operating cash flows. So obviously there is no profit. Cash flows is, cash flow statement, there is first operating cash flow, investing cash flow, financing cash flows. Here says that negative cash flow, negative operating cash flows in our cash flow statement is shown. And F is adverse key financial ratios. Debt equity ratio is also adverse. Many more other ratios which is key financial ratios is adverse. Then inability to finance new project. No any sponsor is available in the market who sponsor our new project. So inability to finance our new project. Okay. Then this all is financial factors. Then operating factors. Operating factors are loss of key management, loss of key customers, then labor difficulties, shortage of supplies, and enter any competitor in market. Loss of key management, this is management. Key customer, this is customer. Labor difficulties, shortage of supplies, there is no raw material, how we make our finished good. So shortage of supplies, raw materials, enter any competitor. This all is operating factor which is raise doubts on our going concern ability. Then other factor, non-compliances of statutory regulatory laws and regulations. We are not able to pay our income tax even though. So it is also raising a doubt on our going concern ability. Then any change in any government policy, where if we make any product and government is ban that product, then obviously our going concern ability is in doubt. Then pending legal proceeding where any claim will arise and we are not able to settle that claim, we haven't as much cash flows. Then uninsured catastrophe, when they occur, there is any disaster can be occur and we are not insured for any type of disaster. So this is also a danger on the going concern ability. Pending legal proceedings, in 560 we also discuss this point now. Subsequent events. Then this all is the event which may cast doubt on the ability of the going concern. Then as an auditor was our duty. Finally, this all we consider, and if there is any doubt on the going concern ability, then first you discuss with the management. Cash flows, net profits, you all discuss with the management. And what is the management's future plan, what is the management's mitigating plan to those situation. If the management give you a mitigating plan, if there is a situation where management is not give you any mitigating plan, then finally you give adverse opinion. Okay, if there is uncertainties exist and no mitigating plan, then you give directly adverse opinion. Okay, if the uncertainty exists but mitigating plan is also exist, mitigating factor, for example, if there is a big loan of 600 crores and the promoter's wife is assured to settle this loan, but you are not satisfied with this mitigating factor, then what you do? Then we give implications on our audit report because there is mitigating factor, but we are not satisfied with this factor now. So you can give modified opinion. But if there is a listed entity, then in key audit matter you should refer this matter. Okay, plus one more matter after the basis of opinion, the matter of uncertainty regarding the going concern. You should refer this matter in this particular point. Okay, if there is uncertainty exists plus there is a mitigating factor. For example, if there is a loan of 600 crore in subsidiary, but the holding company assure that we have a government security of 1000 crore, we sell that security and the 600 crore loan will be paid by us. This is there is uncertainty, but mitigating factors exist. So you are satisfied with this now. So there is no need to give the modified opinion. So you give the true and fair view or unmodified opinion. Okay, but you should give a emphasis of matter para. Emphasis of matter para, that is wherever any matter is as much important that users should know about this matter, then you include this matter in emphasis of matter para. So you write this matter in emphasis of matter para. Okay, then finally one more situation arises where there is no any sufficient appropriate audit evidence. No sufficient appropriate audit evidence. For example, you know what 134 subsection 3 Companies Act 2013, chapter number, I think chapter number 9, auditor accounts. There is a director responsibility statement where director shows that the entity is going concern entity, etc. And the director, if you say to the management, please provide us the director responsibility statement, they refuses any evidence which is not provided to you, so you are unable to make your opinion, so you can give the disclaimer of opinion. I think in this essay very low chance that you give the disclaimer of opinion. Okay, so finally this essay is over. We take a revision. Essay 570 revised on going concern 1 for 2009. S1, Ind AS 1, IFRS 1, International Auditing Standard 570 is also talk about the going concern. International Auditing Standard IAS 570 is also talk about the going concern. Financial statements are prepared on the assumption that the entity is a going concern and continue its operation for the foreseeable future. Okay, entity will be able to realize its assets and discharge the liabilities. What's the auditor's responsibility here? Auditor inquires from the management that the management do the assessment of entity's ability to continue as a going concern for at least 12 months from the date of the financial statement. Plus also inquire from the management about the future plans. Auditor take written representation from the management. Auditor read the latest financial statement, read the minutes of the meetings, then analyzing and discuss the cash flows, profits and other factors with the management. Events conditions may cast doubts about the going concern assumption. Financial events, financial conditions. First is memory trick is L square, C square, D square, O square, double F. LCD off. L4 net liability or net current position. L4 inability to comply with loan. C for creditors and creditors, withdrawal of the financial supply by creditors, inability to pay the creditors on due date. Then D for dividend and delivery, discontinuance of dividend and transaction with suppliers, change from credit to cash on delivery. O for operating and operating loss and negative operating cash flows. F for financial and financial, adverse key financial ratios and inability to finance the new projects. Then operating events. Operating events is loss of the key management. Key management, this is the fat person. Then labor difficulties, thin person. Loss of the key customer, this cute girl. And shortage of the suppliers, 3 hairs supplier. And enter the competitor, big eye competitor. I show this diagram only for remembering purpose, nothing else. Okay. Other is non-compliances of the statutory regulatory authorities, statutory regulations, laws, then change in the government policies, laws, regulations, pending legal proceedings. If there is a pending legal proceedings, this is subsequent event, so I refer 560 here. No? Then uninsured catastrophe, uninsured disaster may be occur and our going concern will in danger. Then conclusion, finally we are on conclusion part. As an auditor, if we found any uncertainty exists regarding the going concern, then what we do? Uncertainty exists and no any mitigating factor, then directly give adverse opinion. Okay. If uncertainty exists but mitigating factor is also exist, but mitigating factor is not satisfactory, then you give the modified opinion plus implication in audit report, that is modified opinion, plus give a key audit matter para that is in listed entity only, and give a uncertainty regarding going concern assumption in basis of opinion. Below this paragraph is also right now in audit reports. Then uncertainty plus mitigating factor is also satisfactory, then you give unmodified opinion plus you also give an emphasis of matter para about this matter. Then if there is no sufficient appropriate audit evidence, then obviously you give the disclaimer of opinion. Okay, this all about SA 570. One point now I discuss what is the difference between the key audit matter para and emphasis of matter para, because there is a big confusion where we which matter we write in key audit matter para and which matter we write in emphasis of matter para and other matter para. So I say in other matter para you directly write as per SA 600 using of the work of the other auditor, and as per SA 299 joint auditor, where you should write that this percentage of liability and this percentage of asset is not checked by us. Okay, so we are using the work of the other auditor. Okay, in other matter para. Then there is key audit matter and emphasis of matter para. I think key audit matter is only applicable on the listed entity, but emphasis of matter para is applicable on all entities. Okay, then second point is in emphasis of matter para you only and only write those matters which is resolved, even though there is any doubt arise, but there is satisfactory evidence you already obtained and these matters are resolved, then only you write in the emphasis of matter para. But in key audit matter para there can be resolved or there can be unresolved matter. I'm not sure about this, but generally resolved matter is come in key audit matter. Sometimes some unresolved matter can be write in key audit matter. One last point is if there is any matter which is in financial statement, then you write in emphasis of matter para. But any matter which is not in financial statement, for example communication with TCWG, communication with management, this type of matter you should write in key audit matters. Okay, thank you very much. This is all about 570.